what I would do and what I did do is like try to change up my balance sheet a little bit. When you're a short seller, you always need extra capital on the side just in case. I mean, every investor kind of needs extra capital on the side just in case things.
Yeah, sizing is super important.
Yeah, like so if things go out of hand, like where is your extra capital? Is it in real estate? Is it in bonds? Is it in some hedge fund that you can pull your money out of? Like you should always have some diversification where if your primary equity book is like the unprecedented shit has just happened, like quantum was pretty unprecedented. The last precedent was literally 25 years ago in the dot-com bubble. I need to go find that capital because, this is, I can either chicken out of the trade, which is totally fine. Nobody should be afraid of chickening out. But I was like, no, this is going to work. I'm going to stick to it. I have to go, find the capital to sustain the trade. At some point, it's going to be so painful that, I'm going to eat a huge loss. But I wanted to stick in the trade, and it worked out thanks to this recent decline. But I think it's always healthy to have this is what the genius of Warren Buffett is. He has this operating business, and if you have an operating business, you literally have capital coming in every year from the business that you're running, and the business is spitting off cash flow. And so if you fuck up, let's say 2025, you lose $1 billion, in trading. But your business is making $1 billion every year. And, if the number is more familiar, comfortable with you, just say $1 million. You have a laundromat, right? Laundromat makes $1 million. Little chain of laundromats. Anybody can build one. Just hard work. Half the Koreans in America have one. And, you make $1 million from the laundromat, and you go put it on 0-day call options and lose it all. Well, guess what? Next year, you still have laundromat earnings. It's a beautiful thing. If you save up $1 million over the years trading and you go all in on something and you lose it, well, you're literally back to zero. You're fucked. So if you have a business that's throwing off cash flow, you can afford some mistakes. You can afford some fuck ups. And that's a really beautiful thing to have. Buffett has like 3 or 4 of those. He has operating businesses, he has float, he's got his investments. All of those things allow him to keep compounding, but he doesn't even take those speculative bets, but he doesn't need to. But in 2008, when it came time to, when basically you had your picking of any investment opportunity you wanted, your dream investments, he was able to get warrants on Goldman Sachs and Bank of America, 2 of the most important companies in the world. And he was not only able to invest at them at good prices, but he was even able to get a kicker of warrants, which is totally unprecedented. So having that extra cash or that extra value somewhere that you can monetize or, convert into cash, it's like the most powerful thing in the world. And all that really translates to is don't be greedy, right? Like the greed would be all of my money is in my brokerage account because I'm going to max it out. No, you should have some money in a home. You should have some money in a fund. You should have some money managed by an advisor. And if things go really crazy, you'd say, listen, John, you've been my advisor for 10 years, but unfortunately, I have to take my money out, I'll be back, but I have like this emergency here where I have to, stay in this trade because it's so crazy. I just need to stay and live 1 day longer than the next guy who's capitulating. And I knew a lot of the hedge funds in my community were capitulating on quantum, and I was just like, I'm not going down with them. I'm gonna stay in this trade a little bit longer, and then predictably the stocks are collapsing now that there has been some capitulation. It gets really painful when you see that happening because, it just tests your willingness to believe in your faith as an investor. Your faith is that markets are efficient. Your faith is that stock prices should follow earnings over the long run. But the long run is years and years. And any given day, your bank's going to call you up and say, hey, you're down 30 million on this. You need to add more money to your account, or we're going to reduce your position. And I think, to your point, I get to your question, there's no answer. I mean,
so you could kind of have a range, right? Like, so Stanley Druckenmiller is probably a better proxy than Warren when it comes to directional stuff, because Warren's more endowment style, at least these days. He would think of it as you kind of start with 10 to 20% notional, and that gives you the room to kind of go deeper.
Maybe in a macro.
He's super aggressive. And I mean,
maybe in a macro trade. Yeah, with the macro trade, that sounds right, but that sounds crazy for an equity.